Hey, I'm Creed with Smart Cell AI. Today we're going to talk about something really cool and really relevant. It's the end of August 2022, and based on whether the fact that we've had two negative quarters in 2022 of GDP, we are either in a recession, depending on how the government decides to define that, or everybody thinks we're coming up on one. You're thinking about buying a home, and you've got to deal with the fact that we're either in a recession or we have a high probability of having a recession either in 2022 or 2023. What does that mean for the value of real estate in Metro Denver? I've done some previous videos and analyses using aggregate national home value data. This particular time, I've spent months, I'm not kidding you, I've spent months digging up exact home sale data for the Metro Denver, Colorado area. So you can see exactly what happened with home sale prices for detached single-family homes, but you can extrapolate that for townhomes and condos if you need to. Exactly in Metro Denver. These are the median home sale prices. And we're going to talk about 6 different recessions. And so it'll give us a pretty good idea of what's going on. And let's just get rolling. If you look at the screen, that yellow bar is I combined these 2 recessions. I don't know if I'm allowed to do that, but I did it. They were a back-to-back recession. And they call it a double dip sometimes. 1980. And then again in 1981, we had national recession. And that was really caused by ultra-high inflation. Now in 2022, we've had anywhere from like 5% to 9% inflation. And you know what that has meant at the gas pump and at the grocery store and everything else you buy. The 1980 and 81 recession was caused by inflation rates in the 15 to 19% range. So if you can only imagine somewhere between double and triple what we faced. And the recession was essentially triggered by Paul Volcker. Well, let me back off. He was the head of the Fed at the time, Federal Reserve. And he was the one that had to put the big slam on inflation. And much of what he did was raise the federal funds rate, their interest rate. And I think that went up to 15, 16, 17% over pretty quickly, just a matter of quarters, to try to quell this disaster that was going on. And anyway, let's just get rolling on this thing. So in this recession, it was a double. So these are 2 different recessions. Those little bars at the bottom of your screen, those are home values, median home sale prices in Metro Denver specifically. So this is really going to help you out if you're in Metro Denver. And why do I have 3 different series? That was part of the months-long project. If you look at your far right, that solid dark blue area, there I was able to get month-by-month home sale data for about the last decade. When you see the middle section there, looks a bit like a zebra, that is quarter by quarter data. And it was the best I could get. I couldn't get the detail I needed month by month. And so each one of those little vertical lines are 3 months, a quarter. So January, February, March, quarter 1. April, May, June would be the second quarter, so on and so forth. So each of those represents 3 months. And then at the far left, I ended up using like 6 sources to get this data accumulated. The far left, I had to go into a closet at the Metro Denver MLS, RE Colorado, and go through printed books from, what is that? That's 40, 50 years ago. And, and just pull out this information manually. So I did the very best I could for you. Let's look at the next one. That is the 1990 recession. This one we're going to focus in some detail on because that was also triggered by some high inflation rate. Not that 16, 17, 18% inflation rate of the 80s, but somewhere between 5 and 6, maybe towards 7% inflation rate in the 90 recession. That's very similar, not quite as high as what we have in 2022. So we're going to take a deeper look at that to see how homes reacted, specifically in Metro Denver, because those our current conditions are very similar, maybe a little bit harsher than 1990. The 2001 recession we'll take a peek at. That one really didn't affect home values a whole lot, at least not in Metro Denver. Everything I'm talking about is for Metro Denver. I've done some national analyses and those are available also, but this is specifically for you. The 2007 to 2009 recession was the monster. This is the one that was actually triggered by the real estate market, and it was a big progressive mess of overvaluing properties, giving out bad loans, and Wall Street and the financial companies just churning money based on high levels of new loans, home sales, refinancing nonstop. And I'm sorry, but the entire industry was guilty of this. I really do know. I spent a decade helping clean up that mess directly in real estate. And I can tell you from the information I saw from literally wading through 1,000 different homes, actually probably a couple thousand different homes. I sold 1,000 of them. It was a mess. The whole thing was a farce. It was a machine made to make money off poor folks that just wanted to buy a home. And it's a whole different story. And if you ever meet with me, we can go into as much detail as you can handle. In the meantime, if you decide to, you can read the book, The Big Short. I read the book, and the movie was pretty good too. Of course, it's pretty entertaining, but it gives you some detail, and you'll get some entertainment from it. Finally, we're going to talk about the 2020 recession. This is, of course, the COVID recession, which is also very similar to what's going on right now. And the reason that's similar is it didn't have high inflation like the 90 was, but everything looked really good as far as most of the business and financial and market indicators leading up to the recession. And then boom, it drops off. Why? That was easy to figure out. We went into lockdown and all kinds of stuff. So the 1990 and the 2020 recessions we're going to take a close look at, because between the two of them, they're very similar to the conditions we have now. Let's get rolling. Let's first stare at the 1990 recession. And so, you look at this and it looks, you know what, let me step back. We're not going to look specifically at the 80 and 81. Those were really different conditions and things were crazy. But you might be looking at this thinking, well, wait a minute, home values just kept going up in Metro Denver. They did. And I want to give you a tiny bit of background, even though we're not going to go in depth on that recession. During the early to mid to latter 80s, Metro Denver was in a huge real estate boom. And much of the other parts of the country kind of suffered during this period, and we boomed right through it. Later on, when the rest of the country was still in a boom state, we kind of paid a penalty before the 90 recession. And I can speak on that firsthand because right about here in early to mid 1987 is when I entered the real estate market in Metro Denver. And I thought that the HUD foreclosure signs, FHA foreclosures, in all those windows would never go away. That's what it felt like to me. But it doesn't look bad, right? 1990, it doesn't look bad either. You just see a little bit of a drop. That's why we're going to go in depth. If you don't go in depth, you don't realize what happened. Let's go right to it. What I've done is I've set up about a year before and a year after the actual recession on most of these. Some I went a little further out if it was a bigger recession, and I might have come in a little bit if it were a smaller recession. So this is still quarterly data. And the recession essentially occurred during that period. Well, from July 1990 through March 1991. And let's look what happened. My goal for you is to try to figure out what would have happened if you bought a home in Metro Denver going into a recession or just months or even up to a year before a recession, because you might be facing that right now in 2022. So can you believe these prices? Just add another zero to each of these and zero on the end of this. And it's almost like today. I mean, this is $88,500 in Metro Denver. This is just 30 years ago. Prices have gone up almost 10 times. It's just having been in the market this long, it amazes me. So what I did is I took essentially where the high point was in most of these cases just before the recession, and that again could be anywhere from a few months to a year before the recession, to figure out how long it would take you to get back to break even after everything takes a dip. Does that make sense? Are we on the same page? And if you look at the arrow going across, essentially, if you had bought somewhere near the upper part of the market before the recession, the 1990 recession, again, that had the 5, 6, maybe 7% inflation rate, it would have taken you about a year, 9 months to recover, to get back to what you paid for the home. And the reason we're talking about this is I just want you to know, going into a home purchase, what the potential downside is, so that you're mentally and financially, hopefully, prepared in case this does take a dip. You know how long you need to ride this out before you start seeing positive growth again. Sound fair? And we're just going to explore each of these with that premise. So here, again, about a year, 9 months. However, and financial markets and real estate markets and economies and recessions are weird. You would have broke even had you sold that immediately at that point, but you didn't know that it was about to go back down in a little while. The buyers, if you were the homeowner at this time, right? The buyers, they were still petrified, so they probably weren't biting too well. If you hadn't been lucky enough to sell at that very moment, it finally went back up. What happens? You probably would have to end up adding on several months to your time frame, and you would have had to have held it for 2 years, 3 months in total to again get back to break even. So markets are tricky. They go up and down. I've had previous videos on how much the volatility of the real estate markets has changed. From the 70s, it was really quite flat, very little volatility. 80s some, 90s some more. And since then, it's gotten almost like the stock market. It goes up jaggedy, and you never know which direction the true trend is going unless you do a whole lot of analyses. Let's keep rolling. Let's look now at the 2001 recession. If you don't remember that one, so much of that was caused due to the dot-com bubble bursting. Everybody that had money was throwing a ton of cash towards these newly created internet-based companies. Pets.com, the dog sock puppet, millions of dollars spent on those commercials, one in the Super Bowl. Anyway, that was our crash. That was our bubble. Let's take a closer look at it. What is going on with Denver real estate? Oh, man, our prices of homes have already gone up 250% since 1990. So that's sad. That happened in a decade. Remember, we were at 84.5, 84.9, whatever that was. Now we're heading toward the 200 range. Let's take a look. This one didn't affect real estate near as much as some of the others because the financial markets, specifically the stock markets, took the brunt of it, deservedly so, because they were throwing billions of dollars toward these upstart companies with little business plan and no strategy. And the bubble burst. It was a bubble. That's one of the causes of recessions, was a bubble. But had you purchased a home during this time, this is about the recession period, if you had purchased it, and notice how values actually kept going up right through that recession period, at 224, somewhere near the peak of the market, strangely enough, during the recession, this one wouldn't have hurt you very much in Denver real estate. It would have taken you about 7 months to recover your money again. So you could have laughed that one off unless you had a lot of money tied up in the stock market, and then you could have cried that one off. This is the big one. This is the 2007 to 2009 implosion. Again, I did a lot of work during that time, and we won't go into detail. This lasted from about December of 2007 through June 2009. That's the actual recession period. A lot of bad stuff happens before and after that period that the government finally announces that there was a recession. Let's talk about that for just a second, because it really is important to you. The government says the recession started here and ended here. They probably, on average, didn't tell you this began until about 6, 9, 10 months after it began. I know it sounds crazy. It started here, but they didn't tell you it started until about here. And then once it ended, again, it's going to be about 6 months, maybe 9. Here, they told you it ended. But all kinds of stuff in the employment and business and stock and economic stuff was going on, typically in a downward motion. And you were just getting fed stuff in the news without any idea what's going on. So we're going to try to prepare you for that if it happens again. This is a confusing one. Look at this. These home values are all over the place. Now here, values had gone up to the mid-200s toward the peak, and they ended up dropping to about the 190 level during the trough, and then started trickling their way back up. Keep in mind, as this baby was crashing, the U.S. government was throwing trillions of dollars into the financial markets to try to keep things from exploding worse. The Fed funds rate dropped to pretty much zero, which means the mortgage rates were extremely low. And they were doing, and then, of course, they threw in this concept of quantitative easing, which is essentially them printing money electronically and divvying it out to the biggest corporations on the planet through various means. So they're throwing everything at this recession because it's a monster. It's just destroying things, not only in Colorado, not only in the U.S., but worldwide. We did our best to take down the entire world this time. And this was truly triggered by real estate and how the financial markets had converted the mortgages into what's called mortgage-backed securities, reselling those on the open market with all kinds of big investment corporations buying them, and then individuals buying those from the big financial companies. And when this baby exploded, it was like the foundation had rotted out from underneath the building. It just imploded downward almost instantly when it went down. Sorry about the history lesson. So there's 2 points here where 255, 200 shows up. But once things start exploding downward, it's usually hard to get a buyer to snag. And so if you had purchased near the top of the market, and this is actually a couple of years before the actual event itself, it would have taken you 6 years. 6 years. You would have had to hold that home during all kinds of bad business news, job losses, businesses going out of businesses, The government spending trillions to try to keep the big financial corporations propped up. You would have had nonstop bad news, and you wouldn't see this future. You didn't know that 6 years later you'd be okay. All you could see was down, and then kind of a sucker's market, if you will, and then down, and then kind of a weird oscillation, and things started to work up a little bit, and then down, and then up, and then down. And you didn't have this chart in front of you. So I just want to make you aware of how things could go bad so that you're mentally and financially prepared. If they do, what will happen? And just to mentally prepare you for that whole thing. Now, do I think anything that might happen in 2022, 2023 is going to look like this? I don't. I don't think that. But I don't know the future. I saw what caused this all the way down to the deepest, ugliest levels eventually. And we don't have that situation that I'm aware of. But keep in mind, very, very, very few people were aware of it when this happened. This was kind of a deep, hidden secret in the financial markets. And when it imploded, it took everybody down with it. So it could take as much as 6 years should something this bad happen again. So let's take a look at our final recession, the 2020 COVID recession. And I'm sorry if I'm going into too much detail and giving you too much backstory. I've never seen any presentation about how Denver real estate values react to recessions, particularly over a period of 50 years. Including the two most like our current conditions, the 1990 and the 2020 recession, 90 because of the inflation, currently because of the inflation. And then, of course, the 2020 recession, we had good economic conditions, business and economic conditions, and then boom, of course, when they locked us down, things plummeted. Again, currently in 2022, our general business and economic conditions are pretty sound. We're mixing sound conditions with higher inflation rates to try to give an idea of what's about to happen. So let's just open this up and take a look. Again, this was the very short 3-month recession due to COVID. But let's talk about a couple of things. Here was the actual recession period. Now, the government wouldn't have told you until well after this was over that it had started, much less ended. But I want to point out something. And bear with me, right about here, January 2020, was when the U.S. acknowledged our first case of COVID, right here. What had median home values, detached single family, had already done? Well, we had hit a high of about 470, and then things for about 4, 5, 6 months were below that and very calm. And at that point, you had a 4% mortgage rate on average. Supply and demand were okay. The supply was a bit light. Demand was a bit heavy. But that was market driven. There were a lot of people moving to Denver. A lot of jobs. People looking for a place to live. So it was a little bit heated, but it wasn't out of control. So I want to run. But let's look what would have happened. If you had bought at the height, and before COVID even hit or was acknowledged, if you had bought at the height, it would have taken you about 7 months to recover. That's not a recession. That was just a calming period, let's call it, in the market. And I think under normal conditions, what that was telling us is we were going to flatten. Things were starting to balance out. People had taken those prices to about as far as they could tolerate and afford, and they were starting to back down a little bit. And normally what would happen is the sellers would figure that out in a few months, and they would start being calmer in what they were asking, and there'd be no overbidding, and things would just normally gradually get under control. But what happened? We got COVID, nothing we can do about that. But immediately, almost immediately, there were several $1 trillion by the government thrown into the economy, and how that trickles in or surges in is kind of quiet and secretive in a lot of ways. But obviously they did a lot of unemployment stuff. They were giving out loans that wouldn't have to be repaid, not only at small business, but big business levels. So they dumped a bunch of money in there, and they were buying things. They were buying mortgage-backed securities, hundreds of billions every month or quarter from the secondary market, which was feeding those companies wanting to put out some more, right? They wanted to continue making a lot of loans. Fed funds rate was lowered. Mortgage rates got lowered to absolutely record lows. I mean, during that whole 50 years we've looked at, we never hit 2.85 to 3% ever until this period. So what happened? We hit COVID, our first case, somewhere between here and here, believe it or not, we hit like 100,000 deaths. We hit like 500,000 deaths, and then we eventually hit 1 million. They locked us down for a while. They let us out. They being, the powers that be. And what happened? And collectively, we were a little bit crazy. Honestly, civilization. We had been locked down, realized life is kind of short, wanted bigger houses, wanted more space, wanted to get away from some of the stuff we had been locked around for so long. We had a bunch of money poured into the economy by the government, and we hit absolute record interest rates, downward. The bottom, we've never seen anything that low. And what happened? Well, this chart ends in, it ends about June of 2021, and we're well beyond that at this point. What happened to the actual prices of homes? Well, we went from mid to upper 400s, and would we have stayed there if all these incentives hadn't happened and COVID? Would Denver have stayed there? Wouldn't that have been nice? But instead, we're closer to 660, about 200,000 above what we were paying for homes before. And it just went crazy. You know that from here, this just exploded. And we're now currently 660 for a median price home. And average prices when the market's exploding up like that are always higher, right? And so that's what you hear in the news because it makes for better news. It's scarier, right? So median gives us a better idea of what the trend is doing, but average when the market's exploding is typically higher. So the news reports every month in and month out, love to preach how much things have gone up. And I'm off my soapbox, and I apologize. I just want you to realize that extra $200,000 they want for the same house that you could have bought 3 years ago for $200,000 less was because of that situation. I don't think in Metro Denver we were going to explode like that. Would we have kept going up? I think so, because we have a lot of people moving in, a lot of good jobs, limited inventory. So would it have kept going up? Yes. Would it have skyrocketed into unsustainable values? I think not. But let's wrap this up for you. If you had bought at the top of the market just before COVID really became a thing, it would have only taken you about 4 months to recover from that recession. You'd have been just fine. And I hope I'm helping. I hope I'm not confusing you. It's my goal to just prepare you what could happen. You might have something that lasts for, in 1990, I got my marker still. In 1990, it would have taken you a year and a half if you bought near the top of the market till the time you got your money break even back, about a year and a half. 2000, what was it? It was very few months, but again, there was kind of some tricky stuff going on. Here, it could have taken as long as 6 years to get your money back. Here, half a year, okay? And so I just want you to be prepared. Now, the two that I think we're most like today is here because most of our economic conditions are in pretty good shape. Businesses are fine, hiring's fine, income and employment. And again, very similar to 1990 because we're dealing with what we think is massive inflation. This was a little bit lower, 6-7%. We were more like 7 to 9% more recently here. But I wanted to see what the results were from 90 and 2020. And, you can put it in your mind which you put more weight on. I would have to weight it a little bit more toward the 1990 recession. So you might want to take a look at that and make sure that you are psychologically and financially prepared to ride out up to about 18 months if things get kind of ugly. And that's the whole thing we're here for. I just want you to be prepared. I've never heard anybody explain this to a home buyer ever. And I think it's because it takes a lot of work. It's easier to make up stuff and just tell you things. I want to give you a disclosure. Stick around for this, please. I thought about what can I do to make you understand that I'm doing my best and I'm giving you my honest answers, and I'm doing it based on a lot of analyses, a lot. So what would happen? I want to make sure you have a disclosure on this thing because, let's take a look at this. Let me explain to you why. Disclosures. Part of the biggest bailouts in the U.S. history came from these guys, or went to these guys, I should say. And let's take a look real closely. Let me prove it to you. This is live at the website, CNN. And these were how some of the bailout funds were spent from that recession, 2007, 2009. And here's our friends Goldman Sachs. So they got, $10 billion directly, but I think they got a lot more indirectly, and I'll explain that in a different video. Let's look at their disclosures. Each one of these is a link that goes to a huge multi-page PDF telling you essentially, don't trust them, don't give them your money, and if you do, anything that happens is not your fault. I got tired of looking through this because, I don't have $10 billion to give them anyway, or 10 million, I should say. So what I ended up doing is taking a look. This is what I want to tell you. Past performance is not indicative of future results. What that means is we have just looked at what's happened for 6 recessions, specifically for Denver real estate, detached single-family home, median prices. We think we have a pretty good idea how it's going to react based on if the inflation rate's high, which it is, and based on and that's for 1990, and based on economic conditions not looking very bad at all going into bad times, and that's kind of like 2020. Those are the two to keep in mind, but I can't guarantee that's going to happen. I've given you my best, and I've done these analyses, and I've lived through this stuff for all those periods you looked at, sadly. Keep all this in mind as you're looking for a home. Be mentally and financially prepared. That way, when you hear the news, every week changing, every month changing, and you hear about prices going up or down, you hear about interest rates going up or down, you hear about job rates going up or down, you already know what's going to happen, and you can look a little further ahead of all that noise and just have a little bit of comfort in that. And that's the whole purpose of this thing, and thanks for sticking in for the whole video.